Looks like we are live. Yeah. Hi, Keith Renno.
Hi, Liz.
Hi, welcome to Las Vegas.
Thank you. Happy to be here.
Awesome. Thank you for being here. Oh, it looks like we're having difficulties going live on Instagram. Let me see if I can fix this really quick. Keith, how's the weather in Ventura?
You know, we're back to a sunny day, so quite a bit of rain the last couple of days. But yeah, beautiful today. Just a little bit of wind.
Yeah. Awesome.
Yeah.
Awesome. Cool. So let's talk about, there's so many different topics that we could talk about right now, including what's going on with interest rates. The economy is showing some signs of strength. So interest rates have been impacted by that. What have you been seeing in terms of interest rates and where they might be headed as we head into spring?
Interest rates have improved going into the new year here for 2024 compared to the highs we hit this past year, touching around 8%, back in the mid 6% range currently. So overall, we have seen rates gradually tick down from like June, August of 2023. The general consensus in the market right now, just on a webinar with Fannie Mae, is that we should see rates continue to gradually tick down, and fourth quarter of this year, probably see rates right around 6%. They were calling out a target rate or kind of a low sometime in the fourth quarter of 5.875.
Nice. That is the consensus as well. In terms of what I'm seeing and the economists that I've been listening to, is that we will probably hit the fives toward the end of the year. Of course, we were anticipating up to 6 rate cuts, and it looks like now it's down to 3, but still good news, and still definitely an improvement from where we were in October in the 8% range. So I'm really happy that we are back to where buyers are starting to get out there and look. Speaking of buyers that are getting out there and looking for homes again, let's talk about tax season. We're heading into tax season, and some people are going to be receiving, some refunds from their taxes once they file them. And obviously, we're not accountants, so always talk to your accountant about taxes. However, what we can what we can say is that you can use your tax refund as a down payment, and you can use it toward your closing costs. Is that correct, Keith?
Yeah, absolutely. So the refund that you're potentially receiving can absolutely go towards down payment, closing costs, kind of good use of the funds. If you're getting a refund, it's kind of that built-in annual savings account. And then also keep in mind, as perhaps you're discussing this with your accountant, and I can help crunch numbers, so you can show those numbers to your accountant, see what the true tax benefit would be. Typically on, say, a mortgage payment between $4,000 and $5,000, there's generally at least $600-$700, sometimes as much as, say, $1,000 of monthly tax benefit. So again, not an accountant, but in general, what does that all mean? So if someone is filing taxes one year, now is purchasing, has made relatively the same income, but now has owned that home the entire year, then they should be receiving an additional $10,000, $12,000 back on their tax refund. And that's where, when talking to accountant, to discuss perhaps adjusting their withholdings. It's on the W-9 form. That's where you can adjust what you're claiming in terms of a 0 to, I think, up into a 15. That's going to determine the amount of taxes that are held back, say, for tax season. And that's, say, why folks are getting a tax refund, because money was held back with the number that they were claiming throughout the year. So perhaps now, say, going into home ownership, maybe it's a little higher payment than rent, to kind of help with maybe some of that payment shock, to adjust that holding number on the W-9 form to where, our customers can receive a little higher net on their monthly paycheck. Maybe that payment won't feel like such a stretch, and can get out of renting and, say, into the home ownership realm.
You make a really great point. There's lots of benefits to home ownership, including, the deducting property taxes, mortgage interest rate, and Keith, you can even deduct, from what I understand, and of course, again, talk to a CPA or your tax preparer when it comes to taxes. But I believe you can even deduct the interest rate on any home equity line of credit and things like that.
Yeah, that opportunity is there. Depends on how much you're accessing, what you purchased the property for. There's some variables that go into that, but oftentimes, especially if it's used for home improvement, then there's generally tax benefits there.
Awesome. Awesome. I do have to say that the tax benefits can help you offset, obviously we are, interest rates are in the sixes. And so payments are higher than they were when interest rates were back in the, fours or threes. However, the tax benefits can help you offset that bigger payment that you're making every month. And I just encourage everybody to think about that as they're thinking about home ownership or possibly selling and moving up is, there are things that exist to offset this additional expense that you're taking on. Now let's switch gears a little bit. I feel like we haven't talked about our VA buyers in a while, and let's talk about VA. I believe that VA buyers have this wonderful benefit that they should use, that they earned the right to use. And a lot of sellers are in agreement with me on that and want to see VA buyers get out there and use their VA benefit. So let's talk about that, Keith. What are some of the, just kind of quick things that we should keep in mind if we run across a VA buyer?
Yeah, so in my professional opinion, still by far the most beneficial loan out there. It is a true benefit. It's nice that the veterans have that benefit. They've certainly earned it. And it is zero down and the best interest rates in the market with no mortgage insurance. And there's no other product like that. There's down payment, closing cost assistance, Fannie Mae, Freddie Mac, FHA. Everyone's really trying to, get together and figure out how to provide more affordability, down payment, closing cost assistance programs, throughout the country. But all those programs are still going to more than likely require some funds out of pocket and then require mortgage insurance, as well as have, say, slightly higher interest rates to oftentimes subsidize the grant funds or the closing cost funds, down payment funds that they're receiving through the programs. When we compare that to VA, no money down, no mortgage insurance, 100% financing. And then once you have your VA loan, especially in an interest rate environment like we're in now, every 6 months, you can do what they call an interest rate reduction loan. It's oftentimes referred to as an IRRRL. And that's where we as the lender, we don't need to gather income documents again. We don't need to do another appraisal. It's called an interest rate reduction loan. And that's truly what it is. It's another benefit for our veterans with the VA loan to allow those veterans to take advantage quite easily in a lower interest rate environment.
That is awesome. I actually had never heard of that. So Keith, the IRRRLs are available only to VA mortgage holders.
Correct.
Got it. Awesome.
Yeah.
That's a really great piece of information. Now let's talk about the talk of the town right now. The Dream for All program. It's a really great. You talked about. It's a really great program. And you talked about how Fannie Mae, Freddie Mac, the government is really trying to bring affordability back, especially for first-time home buyers. And I really think that the Dream for All program is a way that they're doing that. And there's some qualifications that they've put in place now. And what I love about the return of the Dream for All program is that it's not like this, free for all. If you apply, you might get it. Now there are some very specific guidelines to meet to make sure you qualify for the Dream for All program. And now it's also a lottery-based system. So let's talk about that, because I have a feeling that a lot of people are going to apply, or a lot of people are going to want to get this program, but very few are actually going to get it. So let's talk about the Dream for All program.
Yeah, so actually an update on that. I was actually on the phone with the CalHAFA representative. CalHAFA, they are the entity that has really brought forth this program. Yeah. And they shared today that they haven't yet made the announcements as far as when they will be taking reservations. Right now, that date is tentatively set for April 1st. The word on the street in the mortgage industry is that that will more than likely get pushed back to May 1st. And how it will work is a customer looking to utilize the program will come to a lender that has been approved to use the program, someone like myself. We will fully approve them, provide them a certificate that they will then take to register on CalHAFA's website for the program once that registration becomes available. They should be announcing those dates hopefully in the next week or two. So as soon as that comes out, we'll be making announcements. So you get pre-approved, you have your certificate, you go and you reserve on their site, and then from there you are part of that lottery system. And they're going to accept reservations for a certain time frame. They're not quite sure how long they're going to look to, accept reservations. That's going to, I think, depend on the number of applicants that they have register. And then they're going to close it off and do the lottery. And then they're still not yet, they still haven't yet determined how long that person will then have to find a home and close escrow. The talk right now is going to be 90 days. So if you win the lottery, then you will have, say, 90 days to complete your transaction. I think that's where we'll continue to, have some difficulty in the market with the lack of inventory. But, those folks that can win that lottery ticket, so to speak, really, do everything you can to get in those 90 days, because the chances of you resubmitting, and funds still being available and being accepted in that lottery again, I think would be slim and none. So once accepted, to really, get out there and get yourself in escrow. Now, some particulars on this program: in LA County, the income limit is $155,000. So that's something to be aware of. All buyers going on the mortgage need to be first-time home buyers. And the one thing that's not being talked about yet, but it's something really for folks to know and understand, is that you have to, at least one, if there's two customers going on the loan, say we have a couple, both of them are going on the loan, both of them need to be first-time home buyers. Only one of them can have a parent that owns real estate or currently has ownership in real estate, or if God forbid they passed away, at the time they passed, they cannot have had ownership in real estate. So if we have a couple, both first-time home buyers, but both of their parents currently own real estate, they do not qualify for the program. They need to be one of two, or say if it's just one individual, needs to be what they are terming as a first-generation buyer.
Yeah, I agree with you. It's not being talked about a lot, but it's something to look out for. I was talking to, there was conversation going on here in the office, and our title officer was there, and they have ways to run asset checks, essentially, and they can check to see if any family member of yours, including your parents, has ownership in even a mobile home. It won't work. That will disqualify you from being able to apply for the Dream for All program. Another thing to keep in mind is that while these timelines seem to be far off in the future, I think it's really important to have the conversation with your real estate agent or with your lender. If you're planning to apply, if you want to do it, if you want to try and see if you can be one of the lucky ones to win that lottery, I would say have the conversation now, because if we don't have the conversation now, then we're going to be scrambling last minute, and the odds of you actually getting into the lottery are very slim. And the other thing that we should talk about is, what if we don't win the lottery? What if we don't get the Dream for All program? What are other alternatives that first-time home buyers have out there in terms of grants or down payment assistance that we can talk about today, Keith?
Yeah, there are several products out there, whether it's through the Golden State Housing Authority or CalHAFA. They don't just have the Dream for All program. They have several other programs. Typically, those programs will allow between 3 and 5% that can be used towards down payment and or closing costs. So with those programs, if you are able to have the seller contribute towards closing costs, you can utilize that 3 to 5% grant towards down payment. With financing options in general today, with conventional financing, minimum down payment, just straightforward, no assistance, just minimum down payment is only 3%, and then FHA is still 3.5%. So it is possible, if you are getting a seller credit, to step into ownership with no money out of pocket. What we're seeing, I think, is more of a realistic scenario, is not getting the full seller credit, maybe some. So the buyer might be, bringing in some funds to pay the remaining closing cost and then using that grant really for the down payment.
Right. All right. Well, I feel like we've given people a ton of information today. Keith, before we log off, is there anything else that you want to share with all of us?
I would just share when it comes to interest rates, I know we're all hoping for lower interest rates. I think we have customers that are waiting for lower interest rates. And just as you're keeping an eye on interest rate, really keep an eye on the market, because I feel the lower interest rates go and how quickly they come down, that's just going to cause more buyers to get off the fence. It's going to cause more, say, demand to come into the market. And I still think we're going to have a supply constraint there, to where the faster interest rates come down, the lower they come down, I think the higher we're going to see home prices and at a greater rate go up. So,
Yeah.
I hate the whole date the rate, marry the property thing, but if you can get in now, fix your cost of real estate, there's really no signs that real estate's going to be going down with the lack of inventory that I think we'll have for many years to come. And if and when interest rates come down, now be in a position to refinance. I think that's the way to go. And we're already having some customers that purchased last year be able to take advantage of these lower rates this year. Meanwhile, they fixed their cost of real estate. And from when they purchased last year, their homes have not depreciated. They've all increased.
Right, exactly. I kind of have been going back to our old live videos. We started going live like in 2018, I believe, or 2019. And we have talked about the shortage of inventory since that time. And inventory has just not increased. If anything, it has actually decreased since we first started doing these live videos, which has maintained the value of properties to a level where they are today. And I do agree with you, Keith. And we've seen it in the last 90 days, where the minute interest rates came down, even just a little bit, buyers started to get off the fence. And now we're seeing some properties get multiple offers, and some homes sell within the first 7 days of them being on the market. So I can only imagine how many more buyers would enter the market once interest rates are in the fives. So,
and in 2018, when we were talking low inventory, the inventory is probably around 500 or 600 homes. Right now, it's 200 to 300. So half of where we were at in 2018. So it's not just a lack of inventory; it's a scary low amount of inventory, and that's where I think folks need to be working with someone like yourself and be on top of things to get an offer accepted.
Right. I agree. All right. Well, let's end it there. Thank you so much, Keith, for coming on live with Liz. And where can people find you or ask you more questions about home financing or, financing in general?
Yeah. Website, social media, everything is just Keith Renno. So keithrenno.com. Same thing on Instagram, Facebook, cell phone number. Call me direct, 818-521-8515.
All right. Awesome. Thanks, Keith, for being here today. And I'll see you soon.
Thanks again, Liz. Take care.
Have a great day.